Hello, I am B.Renuga Devi. I am working as an assistant professor in Department of Business Administration at Dr. S.N.S. Rajalakshmi College of Arts and Science. Already we discussed two important aspects under economics, that is law of variable proportion. First stage is law of increasing return, and second stage we discussed in last video, that is law of diminishing return. Today we are going to discuss about the law of negative return. So actually this is the third stage in the law of variable proportion in managerial economics. Okay, so what is called negative return? Okay, the negative return refers to a loss or either on an investment, a business or performance or any invested project. So that kind of the investment, based on that we have to occur some losses unexpectedly in financial term, that is called the negative return. It occurs when a company experiences a financial loss or investors experience a loss in the value of their investments during a specific period of time. In other words, the business or individual losses either the money or any business on their investment. So the term negative return can refer to either a net loss across all your investment or any other businesses to a loss on any specific investment or a business activity. Actually, and the negative return for a business is also referred to as negative return on equity. So it is otherwise called it as some economic term. Okay, right. Negative return when an investor purchases some securities with the goal of those security appreciating, but whether the decrease in value, the investor has a negative return. If a businessman or any particular industrial person, they might be having some generate enough revenues to cover all of their expenses to meet their day-to-day activities. Okay, it will experience a negative return for some period. So actually that project that companies invest in some utilizing the debt financing. Okay, so they need to return more than the interest rate on the loan, and also negative return can greatly impact the businesses. You might be asking a question, how it will be impacting the business when they are making the negative return. Okay, right. So that time in terms of leading to bankruptcy or as well as the witnessing a decreasing share price and inability of to obtaining the financial activities. Okay, right. So now we are understanding about the negative return. The negative return is most commonly utilized when referring to an investment. So the investors, they have to allocate the capital to some uncertain securities, might be making the some way of activities, will be making the fundamental research or the any kind of technical research. So if the security might be choosing the appropriate in their value, they will have a positive return. So conversely, if the security might be depreciate in the value, okay, right. So at that time they might be getting a result in a loss. Okay, so they will have a negative return on their investment. Automatically they have to offset the losses in a portfolio against the gains to reduce their capital gain as a tax. Okay, the negative return when we are talking about in the business side. Okay, right. So it can also be used to refer to the either the profit or loss of a business in a specific period. Say for example, we are taking the some live example. Okay, if a company generated some 20 lakhs in revenue. Okay, so but they have some $40,000 might be in cost. Okay, so it would lead then have a negative return, right? So the revenue is $20,000, but their cost is $40,000. So you have to compare. So this is might be resulting in a negative return in their business activity. some businesses report a negative return during their early years because of the amount of capital that initially goes into the business to get it off the ground. Okay, so the spending a lot of money or the capital when did not bringing any revenue will lead to a loss. So the finally the business the negative return should be making the based upon their business and borrow money to making the activities will be getting by the equipment in the higher way activities. Okay, right?